Most Americans spend 40 years believing that Social Security is the one safe part of their retirement, a sacred promise the government made to never touch your survival fund. But as we enter 2026, that promise is being broken in the most quiet, clinical way possible. While you were planning your future, 12 states were perfecting a double tax trap designed to siphon thousands of dollars away from your monthly budget. It is a silent drain on your liquidity that most retirees do not even notice until their bank account starts hitting zero faster than expected. The headlines talk about inflation and the cost of eggs. But the real crisis for seniors this year is happening inside the state tax code. Today, we are revealing the 2026 Blacklist, the 12 states where your Social Security check is actively under fire. But we are also looking at the 3 hero states that just passed emergency legislation to stop this practice entirely. If you are living in one of those 3 locations, you just got a massive unannounced raise that could save your retirement. If you are not, you might be living in a financial minefield. Number 1. The Midwest heavyweights. We have to start with Minnesota and Kansas. These states have long been retirement favorites for their community feel, but their tax codes tell a different story. In Minnesota, the rules are notoriously complex. While the state has recently increased the thresholds for exemptions, many middle to high-income retirees still find themselves handing over a significant portion of their benefits to the state treasury. It is a silent drain on your liquidity that compounds year after year. Kansas follows a similar path, where your Social Security is taxable if your adjusted gross income exceeds $75,000. For a couple who worked hard and saved in their 401k, hitting that $75,000 mark is easier than you think. Suddenly, the affordable Midwest lifestyle comes with a hidden price tag that the brochures never mentioned. Number 2. The Green Mountain Burden. Vermont remains one of the most aggressive states on our list. Vermont is breathtakingly beautiful, especially in the autumn, but it is among the most expensive places to grow old in 2026. Vermont remains one of the few states that taxes Social Security almost exactly like the federal government does, with very few local protections. If you're moving here for the small-town charm and the fall colors, make sure you have budgeted for the spring tax bill because the Green Mountain State has a very high price for admission. Number 3. The Connecticut Corridor. Connecticut has been making some progress in phasing out these taxes, but for many residents, the exemption limits are still a major hurdle. If your income is above $75,000 as an individual or $100,000 as a couple, the state is still taking its cut. It is a frustrating reality for those who thought they were moving toward a more tax-friendly environment. Rhode Island is even more restrictive, using a complex formula that leaves many middle-class seniors frustrated. In 2026, as the cost of living in the Northeast continues to climb, this extra tax burden is the primary reason we see a massive exodus of retirees heading south toward the Carolinas or Florida. Number 4. The Western Holdouts. Out west, Utah and New Mexico are still on the list, though their strategies are shifting. New Mexico has made headlines recently for trying to reduce the burden on seniors, but for many higher earners, the tax remains a reality that shrinks your monthly buying power. Utah uses a credit system that can be confusing to navigate without a professional accountant. The reality is that in these states you are effectively being penalized for having a successful career and a healthy retirement fund. You pay federal tax on your income, and then the state comes back for a second helping of the very same dollars. Number 5. The Mountain State Mystery. Montana and Colorado. These states offer an incredible quality of life, but they come with a tax bill that catches many off guard. Colorado has some of the most complex local tax laws in the country, And while the state offers some senior credits, Colorado still views your Social Security as a taxable asset once you cross certain income thresholds. In 2026, with inflation still impacting the cost of healthcare and utilities, losing even 4 or 5% of your check to state taxes is a massive blow. That is money that should be going to your grandkids' college fund, a long-awaited cruise, or simply your own peace of mind. Number 6. The revenue replacement trap. Why does this happen? Why would a state choose to tax the very people who have spent their lives contributing to the economy? It is called revenue replacement. As states lose younger workers and families to low tax havens like Florida or Texas, they face massive budget shortfalls. To keep the lights on and the roads paved, they often squeeze the residents who stay, the retirees. They rely on the fact that most seniors will not pack up and move once they have settled into a community and a healthcare network. This makes your Social Security check an easy, predictable target for state budgets. Number 7. The federal double tax. Before we get to the good news, we have to address the elephant in the room, the federal tax trap. Even if you live in a state with zero income tax, like Florida or Nevada, the IRS might still be taking a cut of your Social Security. If your combined income exceeds $25,000 for an individual or $32,000 for a couple, up to 50% of your benefits become taxable at the federal level. If you earn more than $34,000 as an individual or more than $44,000 as a couple, that number jumps to 85%. This is the 2026 reality that catches so many people off guard. You think you have escaped the tax man by moving to the sun, only to find that the federal government is still waiting at the door. Number 8. The hero states reveal. Now for the news you've been waiting for. While 12 states are taking, 3 hero states have officially stepped up in 2026 to protect their seniors. Missouri, Nebraska, and West Virginia have reached the end of their multi-year phase-out periods. As of this year, Social Security benefits in these 3 states are now officially 100% exempt from state income tax. This is a massive game changer for the retirement landscape. If you were considering a move to the Midwest, Missouri just became a top-tier contender. State leaders realize that by keeping retirees in the state, they boost the local economy far more than they ever could through a small tax on benefits. Number 9. The sleeper hits of 2026. Nebraska has followed a similar path, realizing that it was losing its best residents to neighboring states. By eliminating the tax on Social Security, Nebraska has signaled that it is open for business for the 55-plus demographic. West Virginia, often overlooked in these discussions, has become a sleeper hit for 2026. With a low cost of living and now a zero tax policy on Social Security, the Mountain State is positioning itself as the ultimate affordable alternative to the crowded coastal markets. These 3 states have proven that it is possible to balance a budget without targeting the elderly, and their success is starting to put pressure on the remaining 12 states on our blacklist. Number 10. Your 2026 retirement strategy. Finding these hidden tax shifts and identifying the safe havens is exactly why we started this channel. We believe that after 40 years of work, you deserve to keep every cent of the promise the government made to you. We are on a mission to help 1,000 retirees find their financial fortress by the end of February. We are currently at 262 members of this community. If this data just saved you a few $1,000s or helped you rethink your moving plans, help us reach that goal by hitting that subscribe button. Joining our community means you will never be caught off guard by a legislative shift or a hidden tax trap again. We do the deep dive math so you do not have to. I want to hear from you in the comments below. Is your state on the blacklist? Are you feeling the sting of the double tax trap? Or are you already planning a tax exodus to one of the hero states in 2026? I read every single response because your feedback tells us which state we need to investigate next. Are you worried about the federal thresholds, or is the state tax your biggest concern? Let us start a conversation and help each other navigate this complex financial landscape. But remember, state income tax on your Social Security is only one piece of the puzzle. You also have to consider property taxes, sales taxes, and the skyrocketing cost of health care. If you want to see how the zero-tax giants like Texas and Tennessee actually compare when you factor in every single friction cost, you need to watch our 2026 Tax Showdown video. We break down the property tax traps in the Lone Star State and the sales tax surprises in the Volunteer State to find the true winner for your specific income level. Do not let one tax saving blind you to a bigger expense elsewhere. Your retirement is too precious to leave to chance, and the math is the only thing that does not lie. I'm Bill Oxley, and this is Retire Smart. I'll see you in the next one.